celebrate this Halloween by looking at the horror stocks of this year. And 2019 has seen many companies under pressure with executive resignations, profit falls, and heaps of debt. Joining me to unpack the horror stocks is Nic Norman-Smith, the Chief Investment Officer at Lentus Asset Management. He is seated next to Nolwandle Mthombeni, an investment analyst at Mergence. And of course, I also have Edgar Mafoko, a portfolio manager at FNB Wealth in studio in on this conversation. Thanks, guys. I'm so excited about this conversation. It's not an exciting conversation to be excited about because obviously these are the stocks that have lost you and your clients money. But let's begin with the most horrific in terms of the worst performer on the JSE so far this year, that being Tongaat Hewlett. Year to date, that share price down 76%. The problem with this obviously is that there's nothing you can do about it since this stock is suspended. But Nic, your take on Tongaat and where the future lies for this counter?
Yeah, Warren Buffett said you should own a company that you'd like to hold even if the stock market was closed for 10 years. So you don't really have a choice here. Unfortunately, I don't think he would have liked to own this one. Yeah, this was a business that, a sugar business, but actually it became a property business. And this was quite attractive for people because it was churning out profits as it was selling off some of the excess properties that it had up the Natal North Coast and various other places. Unfortunately, what appears to happen is that they hadn't really been selling it for as much as they said they'd been selling it, and they'd been crooking the books. We'll see when the forensic report comes out, but that's certainly the rumor. So the share's been suspended. A lot of people may be in quite a lot of trouble. So yeah, it's not one that you could buy even if you wanted to, but certainly, not great to see in a market that's had a number of fraudulent activities. It's one, business is cyclical and companies do well and do poorly, but when companies do poorly because of fraud or things like that, that's obviously very, particularly concerning as a shareholder.
No, for sure. And obviously Tongaat, I think being no, it's not. Who's the other sugar player here? Because when Ilovo fell off as a result of its majority shareholder, buying the majority of the stock, RCL is left. And I'm just interested in your take. And Crooks, yes. I remember being corrected there. But I'm just interested in your take in the sugar sector. I mean, you can't, sweeten up your portfolio with the likes of a Tongaat. Is the likes of an RCL or a Crooks a great sweetener to add in, or you don't see them being treats anytime soon?
So I think you should stick to sweets that are bought in your supermarket because it's the supply and demand dynamics in the sugar industry is still bad. There's a surplus of supply from Brazil. They've been flooding the markets, and as a result, the sugar prices are not going up. So in terms of the outlook, it's quite dim, and you're not really going to realize any much profit in terms of sugar in the market right now. So I'd stay away from the sugar market at the moment until we can see some equilibrium and stabilization in the sugar market.
And there's a lot of subsidization, particularly in Europe and the States.
Sure.
So it's not a level playing field. They said everyone wants to give donations and aid to Africa. If they just stopped their sugar subsidies and let Africa actually compete on a level playing field, we could export quite a lot of sugar.
Sure. And you agree?
I agree with that. And I think for me the biggest disappointment is, I think just before the news came out, I think they were looking at separating the business and have a property development company, which has been basically driving earnings for the last few years. And I think all of a sudden this happened. And I think the one thing with the forensic investigation as well, so I think we'll only get the headlines of what they found. So we're not going to get the full investigation into what actually happened. So I think that will be a bit of a worry for investors. But I think overall, the outlook for sugar not the most positive at the moment.
Yes, and I'm on day 2 of no sugar in my coffee, so yeah, they can count me out as well. Talking about forensic reports and fraudulent activities of companies, the other 2 companies that are quite down on the laggard scale in that regard are EOH, down 49% year to date, and also Steinhoff, down 41%. I didn't think Steinhoff could go any lower, but yeah, it has. So just your take, Edgar, on the likes of an EOH and Steinhoff. The reports have come out. We've seen what's happening. I mean, EOH has even gone as far to say as they instituting criminal charges against some of the former directors. Does a company like EOH and Steinhoff offer potential value given what's happened?
I think for long-term investors, I think investors have lost their patience. I think if you count the number of disasters that we've had over the last few years, there's quite a few. And I think if you look at Steinhoff, for example, I think that's going to take a while to resolve, if anything's resolved. And I mean, you've got litigation also everywhere at the moment. And I mean, investors are just simply running out of patience. And I think EOH is probably a different one. I think it's a smaller company. So I think for them to turn around the company, if that ever happens as well, I think it might happen quicker. I think for them, they probably had a bit of a watershed year. I mean, if you look at the results, it does seem like everything was put out there. So I think, investors will probably be more comfortable going into an EOH if they are willing to stomach, any other potential risk that comes out. But I think nevertheless, I think investors have simply just run out of patience, and I think they're just cutting their losses and moving on to the next best stock, in my view.
Nolwandle?
So, I mean, I think what's been happening, there's been a turnaround. And anytime the new management team comes in, I think you should take it in based on the merits of who's in, the changes that have happened. So that's the first thing where I, give the management team a benefit of a doubt, given that there has been some speedy changes. We've seen the people have been fired, we've seen some accountability, we've seen some, legal action being taken. So things are happening. Second thing is we're seeing that in terms of the industry that they're in, EOH has been a strong player, and it's still, there's lots of demand in terms of what they're doing. So if you look at the business model, it's still a viable business model, but doesn't have as many headwinds as many other sectors. So I would actually say that this is an opportunity where, of course, you're going to take a long-term view, and there is some risk, and therefore that's where you put it into your valuation. You model some risk there, but if the valuation and there's good enough upside, I think there's an opportunity there.
No, for sure. I mean, we're talking about the fourth industrial revolution, right? And any player that is in technology, it's difficult to look past them, given the significant role that's going to play. Nic, your take on these two, and perhaps also add to Sasol. I mean, is this also something that you would stomach? Because at down 33%, a lot of people are stomaching it right now.
Yeah, so EOH, I mean, I agree completely. The underlying businesses of an EOH versus a Steinhoff, I mean, it's obvious, right? Tech versus retail. Of course, it's all about valuation, but both of these companies are under pressure. The concern with the EOH is obviously part of the business model was buying additional companies using your stock, which then rated higher, which then kept everyone happy. And when that unwound, it was obviously a huge issue. I think a lot of that's been flushed out, and a lot of that's in the price now. So the question is the market discounting the value of the underlying businesses enough, and is there any other dodginess, for want of a more eloquent word, out there? But certainly, I think an EOH versus a Steinhoff, is a little bit more attractive. Sasol, absolutely. I think that's the biggest opportunity of all of them. We've got the oil sector, which is under pressure. But if you look at the supply-demand dynamics of oil, we're seeing record low levels of exploration, which is going to put pressure on the supply side. And on the demand side, although there are a lot more Teslas around, there's still a huge demand for oil. It's still massively more efficient as a fuel stuff than anything else. So it's not going to go away anytime soon. And management has obviously been diabolical in terms of what they've done. But what the market tends to do is throw the baby out with the bathwater. Their US plant is starting to come online, should generate some money, not nearly as much as they wanted to justify back in the day, but it's not worth zero. And the underlying business is a very solid business, as we saw in the recent results. Production is strong, and it makes a large amount of money. So it's a very, very attractive opportunity.
I mean, there's a lot of stocks that have underperformed, and for a whole host of reasons. I mean, I'm just looking at Old Mutual, also a laggard in the financial services sector, Discovery, and I imagine that's got to do with the concerns around the bank and now the NHI and all of that. Shoprite, also a key underperformer. But which stocks have been horror stocks in the portfolios you're managing, have underperformed in terms of the targets that you had set at the beginning of the year, and what are you all going to do about them? Nolwandle?
Okay, so now I'm going to expose ourselves. But I think one of the underperformers for us was for Brait. We got in there to look into the opportunity of taking advantage of an activism position. So we had to kind of take a hit before the price came up, and we did take a huge stake in there. But it's part of a long-term view in terms of the driving around the change in that. So Brait it has cost us in the short term, but I think looking forward, if you think of the initiatives that might go in terms of turning around management and realizing these assets which are much higher value than the market gives them for, and with a good management team who's not going to get incentivized correctly and be awarded for for not performing, I think there's a good story there. But we did have to take a break considering where we came in.
Are you saying that we should be on the lookout for possible firings or resignations when it comes to the Brait management?
My lips are sealed.
Lips are sealed. Okay, we'll be watching out for that. Edgar, for you, your portfolio?
So I think Sasol's been a major disappointment. But I think in terms of what the company offers, there's not a lot in this market, because I mean it gives you exposure to the energy market. I think it has been disappointing in the way that they've handled the whole Lake Charles project. But I think for the long term, I think it's it's definitely one that I think offers value, in my opinion. And I think if you go back to when Brent was $30 a barrel, Sasol wasn't as cheap. So I think from a valuation perspective, single-digit PE, which is looking even more attractive. So I think it's definitely one that's cost us in the short term. But I think going forward, definitely one that we're going to hold.
Nic?
Sasol the same. I mean,
Sasol
we
the
managed
same.
to avoid most of all of the other horror ones we've discussed. And a lot of those, their valuations were very expensive. Look at the retailers like your Mass Marts, etc. It's been expensive for a very, very long time. So that one you can at least, as a valuation-based investor, you're going to avoid it. Sasol's looked reasonable for quite a while, and it's hurt us. So that's been a mistake so far. But yeah, we don't, if you look at the underlying business, we don't think it's worth nearly as little as the market is placing.
Right. I mean, one counter that it looks like the market is taking a different view on is MTN, and they did release their third quarter reports today, and it looks like, I don't know, the turnaround is starting to begin in terms of their year-to-date performance amongst the other telcos. Are you agreeing with maybe some other market participants to say that MTN's future is possibly bright here, and that the worst is over for MTN? Nolwandle?
I do. If you look at MTN, they are a strong player without the African continent. They are within the top 3 in every market that they're in. So they have a very strong position. And they've really had, obviously there's lots of noise around Nigeria, and they've been able to come through that, and Nigeria's been listed now, so we're hoping that there's no more noise. And a lot of the discount, we had a Nigeria discount into going to MTN. But going forward, we're seeing, some, within the different regions, there's some growth there. There's some asset realization, so they're going to sell off some assets. We're going to have some cash flush. The balance sheet will just be full of cash, which every investor loves, because then it means it's going to be returned back to shareholders. So if you took even a short to medium term view, at least you're going to get some returns from cash being returned to shareholders there. In addition, it's going to be in a much stronger balance sheet position, although the telco of its kind does usually have a strong balance sheet. But also you can see that it's going to continue to gain some traction in the markets it's in. It's been tough in South Africa. They've been losing market share, and that will happen. Data is expensive. I'm still complaining. How many years has been going on? But you must realize that as much as Africa might be ex-growth, it's got a strong position, and it's only a third out, but a third is in South Africa. The rest is African and other regions there. And I think that there's some growth potential there, and the future is bright, especially now given that it's gone through at the worst of it.
All right, in that analysis though, and perhaps Edgar and Nic, you guys can pick up on this. Are you pricing in for the xenophobia risk? Because this is a situation that looks like we haven't quite sorted it out yet. If we just take a look at what happened in terms of the media visuals in the city of Cape Town, it's still rearing its ugly head. And for me, I'm asking, are you looking at the possibility of what happened a couple of weeks ago, whereby in Nigeria there was also a pushback whereby some stores, some South African companies had to also close their stores as a result of South Africa seeming not to do enough by way of xenophobia. Is this being factored into the price of counters like your MTN, like your MultiChoice, the various banks that even do have operations in the rest of Africa?
Yeah.
Edgar?
So I think obviously when you try to price uncertainty, it's obviously quite a massive task. You can't exactly say, look, R5 is probably worth, if things go wrong in terms of xenophobia or Nigeria. But I think when you look at the stock and where it's trading, I think there is a lot of that priced into the stock at the moment, in my opinion. And I think the one thing that they've done well when you look at MTN is they've listed Nigeria separately. So if things go wrong in Nigeria, it will affect the Nigerian stock market for exchange, for example.
Sure.
And I think they've done well in that aspect. But I think, to finally say, look, xenophobic or political uncertainty, you're going to price 20 Rand in a share, I think it's extremely difficult to do, in my opinion. But I would say, given the pullback that you've seen in the last few months in MTN, I would say it has priced in all of those risks. And I think they really are going to reap the rewards going forward in terms of what they've put into place in Africa and in Nigeria, just to mention a few.
Sure. And Nic?
Yeah, the reality is this is an emerging market business. So it's xenophobia today, it's land expropriation tomorrow, it's Nigerian government trying to steal your money the next day. That's the way it is. What's interesting though is that in the past, when everyone was so positive on these businesses, they were rated. People forget about risk when things are going well, and they rated them like developed market stocks, and they're not. There are risks there. So, but as Edgar says, I think a lot of that is priced in. But don't forget that when times are good as well. Just remember that something is going to come around the corner to bite you. That's as sure as night as turns today. As long as you factor that in terms of your valuation, then you're a little bit more protected as an investor.
And if Moody's comes around the corner on Friday to bite by saying, you know, what many people think that they should say by way of South Africa's economy, but obviously things that, you know, won't have the best of results for some of these counters, particularly SA-facing stocks, what happens then?
Yeah, look, it's a tough one, but I think once again you have to say, you know, after the speech yesterday, how much of that is priced in? So I think
not a lot. If the rand is you know, your compass or your go-to.
Yeah, but I would probably say, look, you know, in the run-up to that, I think obviously the rand SA Inc. stocks will probably be most sensitive to what happens. But I mean, you've got to have a diversified portfolio ultimately, and say, look, you know, if this happens, you know, what's going to happen to the balance of the portfolio. But yeah, I think we'll just wait and see. But I think it's probably on a knife edge, and yeah, we could see more stocks falling more than 50% for the year, as we've seen a couple that have done already.
For sure.
Yeah.
Briefly, Nolwandle, Nic?
So I think, you know, if it happens, bank stocks are going to get hit. Bank and retailer stocks are going to get hit. But then what I say, go shopping. Go shopping, go find the best quality counters at the right valuation in there, and just go have cash on hand, and then you won't regret it later.
Yeah, markets are discounting quite a lot of bad news. There's a lot of decent companies on the JSE at pretty reasonable valuations. Maybe they'll become dirt cheap. But yeah, I do think
cheaper.
I do think quite a bit of it is in the price.
All right, so y'all are saying come Black Friday, the place to go is not the mall, it's the stock exchange. Thanks so much for this great conversation, very enlightening. Thanks to my guest, Nic Norman-Smith, the Chief Investment Officer at Lentus Asset Management. Also, Edgar Mafoko, a Portfolio Manager at FNB Wealth and Investments. There he is. And of course, Nolwandle Mthombeni, an investment analyst at Mergence.